Good morning. You're watching Market Cafe with me, Ankur Mishra, and let's get started with a lot of action which has happened in US markets. While if you see on the indices, S&P 500 was nearly flat, and if you talk about Dow Jones, it ended actually in the red, but overall Nvidia shares climbed 4% after reaching a new 52-week high. Alphabet advanced 2% and AMD gained 3%, contributing to the tech sector strength. The S&P 500 was less than 1% below at 6,147 after the intraday record set for February 19. It was also within the reach of closing all-time high. Now, it is all about the next cues which may be coming in from the geopolitical tensions, and investors are waiting for that, and therefore even on the crude front you would have seen that WTI was hovering around $65, and if you talk about Brent crude, that was around $68. Now the next month there will be a meeting of OPEC, and all eyes will be there whether or not an output increase happens in this meeting as well. But for now, Israel and Iran remains the focus. You would have seen the comments which has come in from Donald Trump regarding the truce between Israel and Iran. But let's also shift focus to Indian market, and Indian equities indices meanwhile ended on a strong note with Nifty around 25,250 at close, and the Sensex was up more than 700 points and the Nifty was up 200 points. My colleague Snehi is joining with all the action that happened yesterday, and what should you expect today?
Well, yes, we've seen a very good trading session yesterday, wherein we've seen some good moves coming in across the board for benchmarks as well as the broader end of the market. You had Nifty that did very well. It closed above the 25,200 mark and almost an 0.8% uptick is what we saw on the Nifty 50 at market close yesterday. You have Sensex that did well in tandem with the Nifty, almost an 0.8% uptick coming in on that front as well. Nifty Bank slightly underperformed the benchmarks, but not much to complain about because the 0.3% uptick almost is what we saw on Nifty Bank as well. The real show of strength was coming in from the broader end of the market. While the mid-cap space underperformed the benchmarks, you have the small-cap space that has outperformed the entire breadth of the market yesterday with almost a gain of more than 1% in yesterday's trading session. Select names from the Nifty 50 pack. Titan did very well, a 3.5% uptick coming in on that stock yesterday on the back of a positive Macquarie note coming in. That was followed by M&M, Grasim, Infosys, JSW Steel, Nestle, Power Grid. These were all the stocks that traded with gains of anywhere between 1.5% and 3%. On the flip side, what did not do well in yesterday's trade was BEL, Kotak Bank, Aisha, ONGC and Axis Bank. So some pressure is what we saw on Nifty Banks and Nifty PSU Banks. And having said that, PSU Banks was the biggest sectoral loser in yesterday's trading session. There were some names from this group like Central Bank, UCO Bank, IOB that did well, but names like Union Bank, Bank of Maharashtra and Indian Bank that were under pressure. Other than that, Nifty IT top sectoral gainer led by Emphasis, Infosys, LTI Mindtree all looking good over there. This was followed by Auto, FMCG, Realty, Pharma, Metal, Energy, Banks and PSU Banks in that pecking order. All the sectors closed positively in the green yesterday. All in all, we've had a very good trading session yesterday, and as we head into expiry today, here are some important levels that our techies told us to watch out for yesterday when we interacted with them. You have word coming in from Rajesh Palvia, where he's seeing another round of short covering on expiry day. Nifty levels 25,300 and likes the auto space. He's saying watch out for the auto space today, especially names like M&M, Ashok Leyland and TVS Motors. Richard Jain is advising to watch out for a level of 25,150 to 25,200 on this Nifty. So watch out for all of these levels in today's trade.
All right, so a lot of action has happened globally, and even the domestic markets are waiting for global cues. But how to interpret them? Peter Cardello, Chief Market Economist, Spartan Capital Securities, is joining us to decode the same. Welcome, Peter. My first question to you will be regarding US market action yesterday. It was flat on indices, but almost trying to touch all-time high. How do you assess that?
Yeah, I think, the market is doing quite nicely here. And I think there is reason to be optimistic on several viewpoints. And of course, the first one is that the war between Iran and Israel, and of course, after the bombings by the United States, seems to indicate that it's not going to be a long-lasting one. And the United States seems on course to probably negotiate with Iran. So that's a good news. The second viewpoint is that is being more or less confirmed by the drop in oil prices after the speculative run-up. And the third good news is that yields are going south, are moving south. And that's in spite of the fact that Fed Chief Powell, in his 2 days of testimony, basically held firm on monetary policy and indicated that the Fed would not be intimidated. And so I think that's good news. And of course, we're now approaching the end of the quarter. So there is a lot of window dressing. And then, of course, I think the market is setting itself up for another positive earnings season, which will begin in about 10 to 12 days. And so I think the market action is indicating that we are probably in the midst of a early summer rally that's likely to last during July and August.
This is Ankita also joining in here. Good morning to you. Peter, a couple of things that you mentioned here. First is the cooling off of oil prices. The second is the bond yields coming off, and the fact that, despite, like you mentioned, Fed Chair hinting towards, keeping the rates steady despite the pressure, not succumbing to the pressure. You see this market rally, like you mentioned, to continue because right now the US markets are already sitting at their all-time highs. But if you look at the macros, it is ripe for another rally coming ahead, right?
Yes, I think so. And another good point, macro data. Of course, on Friday, we're going to get the PCE price inflation index. And I think we'll be headed in for a little bit of a positive surprise in the sense that we're not looking for headline inflation to move up by very much, by 0.2%. In fact, core the same, and on that is on a monthly basis, and on a yearly basis, actually headline inflation likely to stay unchanged, but the core year-to-year inflation may actually come down to about 3.7%, which would be a good indication that inflation is moving in direct direction. Now, of course, that would probably raise the question as to why the Fed would not cut rates in July. Well, there is some speculation about that. We've had two Fed members, Waller and Bowner, who basically are in favor if the data is favorable to cut rates in July. But I remain skeptical of that. And the reason for that is, once again, the reason why Powell and company is hesitant is because they have to wait and see what kind of tariff inflation we'll be looking at, if we're looking at any. And so despite this good news that we expect on the inflation front, the Fed is not going to, we believe that the Fed is not going to lower in July, but certainly there's a good possibility in September.
Right, that's a word coming in from Peter. Thank you so much for joining in, and we will definitely keep an eye what Fed does in the next policy meeting. But Rabinder is actually ready with the list of stocks in news which will be buzzing in trade. Rabinder, over to you.
Well, as Tex Macro Rail can be in focus, where company has secured a major international order worth $62.24 million, which is equivalent to 535 crore from Cameco SS Cameron. So back of this, Texmaco can be in focus. Apart from this, CEAT can be in focus, where company has announced a capital infusion of up to rupees 400 crore in its wholly owned subsidiary Sri Lanka subsidiary CEAT OHT Lanka Private Limited. And apart from this, company to raise as much as 500 crore through NCD via private placement, and this is an addition with the 250 crore NCD already. Apart from this, company also received board approval to avail of a credit facility of up to rupees 1000 crore for business purpose. Moving to next, Tata Steel can be in focus, where company has acquired 179 crore equity shares, which is aggregating to USD 180 million dollar, which is equivalent to 1562 crore in TSHP. Post this acquisition, it will become the wholly owned subsidiary of the company. And Tata Steel Limited also has received a demand show cause notice by the Office of the Commissioner CGST of rupees 891 crore. Moving to next, Jio Financial can be in focus, where company has invested 190 crore in its wholly owned subsidiary Jio Payment Bank Limited by subscribing 19 crore equity shares. Apart from this, Tejas Network can be in focus, where Rakuten Symphony and Tejas Network has announced a partnership to drive global expansion through interglobe 5G solution. And lastly, AU Small Finance Bank and Federal Bank, both the stock can be in focus, where for AU Small Finance Bank, board meet is scheduled to be held on 28 June to consider fundraise, and for Federal Bank, board meet is scheduled to be held on 30th June to consider fundraise.
All right, so those are the stocks that we need to be keeping an eye out on in today's trading session and how they move. But let's go across to my colleague Varun, who's standing by with all the cues that you need to keep on your radar. Take it away, Varun.
So the most important event to watch out would be Nifty expiry, because after the geopolitical tensions receding, we have seen Nifty actually showing a rally till 25,200 marks. So let's see where the Nifty expiry actually happens. Other than this, in global events, you have US goods trade data, also the revised GDP numbers and initial jobless claims coming. So this would impact the overall US market. So keep an eye on this event. You also have some of the earnings like Nike, H&M and Walgreens Boots would be delivering the earnings. So keep an eye on this. In India, Bank of India would be having a board meeting to actually consider fundraising, and also Nestle is having a board meeting to actually consider bonus issues. So this is going to be an important day for the shareholders of Nestle. Also, if you want dividend from Cipla, Syngene International, Bajaj Finserv, HDFC Bank, so this would be the last day to buy the shares to be eligible for dividend. In some of the other global events, you have EU Leaders Summit in Brussels, you have Richmond Fed President speaking, and also you have Bank of England Governor who would be speaking. So these are some of the other important global events that you need to keep an eye on. But the most important event would be Nifty expiry.
Thanks, Varun, for all those details. Now moving on, the latest greenhouse gas index shows a worrying increase with the CO2 and methane levels at record highs. This surge is driving global temperatures upwards, fueling extreme weather and threatening food and water security. At the India Climate Summit, carbon efficiency and offsetting are the sharp focus as India and the world race towards net zero targets.
Well, with that, it's time for us to slip into a short break. But before that, let's slip into the news for the hearing impaired. Yes, my colleague Shrishti Sharma is joining in with the details of that.
Well, yes, good news coming in from Maharashtra, wherein the first ever power price cut has been announced in the state of Maharashtra by CM Devendra Fadnavis, where he has said that 10% of the tariff cut will be implemented in the first year, and then 26% power price tariff cut will be implemented over the next 5 years. Indeed, a positive news flow, not just for the consumers, the industrial space as well, wherein he's highlighting the fact that 70% of the state consumers actually use less than 100 units, and they will be the biggest beneficiary of this power price cut that has been announced and that will be implemented. Along with that, he's also highlighting the fact that it's not just the first time that the state is undertaking such steps. Other than that, generally we have seen, and typically rather, we have seen the state authorities actually going ahead and the Electricity Regulatory Commission going ahead and demanding for a tariff hike in the tune of 10% or so. But this time it's the other way around, wherein the 10% power price tariff cut has been announced in the state. So, well, of course, in the back of this particular news flow, all these power suppliers will be the key to watch out for, because what do we believe is that all these agreements are under the power purchase agreement. So, for now, the bids have already been through, but some of the upcoming bids, or rather the future bids, those will be the key to watch out for. The key suppliers like Tata Power, Adani Power, let's watch out for those. But along with that, what Maharashtra CM has also announced that there's been an increased focus on the renewable energy in the PPAs to drive the future cost savings and affordable tariffs as well. So he does believe that there is focus more now on the renewable side of the energy, and that will help sustain those lower tariff rates in the future as well. So that's the news flow coming in that we are gathering on the power price cut. It's the first ever that has been announced in the state of Maharashtra. Back to you.
For at least consumers, Srishti, but moving on, the Indian economy remains resilient despite global economic trade and geopolitical uncertainties, according to an article of State of the Economy which is released every month by Reserve Bank of India. What is it which has been highlighted in this article? Let's go across to my colleague Anjali for those details.
The Reserve Bank of India has come out with its monthly bulletin for the month of May, in which they've said that the global economy is in a flux, that it is reeling from the twin shocks of trade uncertainty as well as the spike in geopolitical tensions. Now, this is of course referring to the trade uncertainties in the form of different tariffs and the geopolitical tensions that are shipping up in West Asia. The RBI said that agriculture has showed a broad-based increase in production domestically in India. Domestic prices situation has continued to remain benign and within the range of RBI's threshold. Financial conditions have now become conducive and remain conducive to facilitate the efficient transmission of the rate cuts that have been announced by the RBI to the credit market. Overall, talking about the global economy, RBI said that high frequency indicators on global manufacturing activity has continued to contract for the second month, again referring to the trade uncertainties in the world. However, resilient economic activity across domestic, industrial and services sector was observed, meaning that India's domestic economy has continued to remain resilient even though globally there are a lot of uncertainties. The RBI has also said that they're seeing a sharp and sustained easing of food price inflation on the back of record crop production in 2024-25.
All right, moving on then. Earlier we caught up with Jamal McCly, who's the Managing Director of McCly Financial Services, to understand how is the rupee performing amid the geopolitical tensions. Let's go across and listen in to what he has to say.
India is in a sweet spot, right? But again, as long as Trump is around, you're not going to see any huge trends, because he's very powerful, being the boss of America, and anything he does could change things. So people are going to be cautious. So you're not going to see huge amounts of money coming in. You will see, I think, money coming into India, but not huge amounts. The real issue, though, in India is FDI. As you see, we're not getting direct investment, right? Which is really what we want. Now, it's not that India is too expensive like the US, but what it is we need to change our processes more. I mean, we keep talking about effective, not deregulation, but effective making business easier, right? And the politics, of course, remains the politics. So that is what's slowing us down. But generally, I would say India is in a good place. The rupee, well, it'll bounce around. I think I'm pretty sure we will see the low of 88 again. But it will not stay there, right? So broadly, I would say over the next 12 months, I'd see the average value being perhaps north of 86, 85, more or less where it is today.
All right, that's the word coming in from Jamal McCly. But also, let's pay attention to how Asia Pacific markets are performing. Mixed kind of trends coming in from Asian markets. You can see Hong Kong index, which is trading lower, Hang Seng down around 0.5%, but Nikkei is actually leading the Asian rally, where it is up around 1% as we speak, while Shanghai and Australian ASX 200 is trading flat. So mixed kind of signals which is coming in from Asia Pacific market, and Nifty implied open is actually suggesting an uptick of around 43 points. So all in all, flat to positive kind of start expected for Asian market, expected from Indian markets, and mixed signals from Asian markets.
Absolutely, Gift Nifty indicating a rather muted start for Indian markets. But with that, it's time for a quick breather. Don't go anywhere. We'll be right back on the other side. We'll get you more updates.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions.
High Cooperation Organization Defense Ministers meeting marking the first high-level visit by an Indian minister to China since the Ladakh border standoff began in May 2020.
Under Operation Sindhu, 296 Indian nationals were evacuated from Iran and arrived in New Delhi from Mashhad. With this, a total 3,154 Indians have been brought back from Iran.
2 dead and over a dozen went missing after cloudbursts led to flash floods in Himachal Pradesh yesterday. Rescue teams are racing against time as relief operations intensify. Meanwhile, IMD has issued an orange alert for heavy to very heavy rain in several districts of Himachal in the next 24 hours.
Let's shift focus to global stories. It's a historic shift in global defense policy. NATO leaders have agreed to boost defense spending to 5% of GDP, responding to growing threats from Russia and terrorism. The announcements came at the NATO summit at The Hague, where leaders reaffirmed their commitment to mutual defense and vowed to protect citizens. And this is to defend the alliance and safeguard democracy. The new target includes 3.5% for core defense and 1.5% for related investments. Notably, aid to Ukraine will also count towards the spending benchmark. The plan will be reviewed in 2029, marking one of the NATO's move in decades.
And US President Donald Trump also spoke on the Russia-Ukraine war and Russian President Vladimir Putin. Let's go across and listen in.
Two others, in addition to that, nobody's ever done anything like this. No, I consider him a person that's, I think, been misguided. I'm very surprised, actually. I thought we would have had that settled easy. I've settled 4 of them in the meantime. But he did call up, but he said, he's close to Iran. He'd like to help us get a settlement. I said, no, you help me get a settlement with you, with Russia. And I think we're going to be doing that too. Yeah, please. Go ahead, please.
Donald Trump also made important comments on comparison with Hiroshima. Speaking at NATO summit in the Netherlands, US President Donald Trump made a huge announcement saying that the US and Iran will talk next week. Trump also controversially compared the outcome of June 22 airstrikes to the decisive end of World War II, when the US dropped atomic bomb on Hiroshima and Nagasaki. That ended the war, and he said, I don't want to use the example of Hiroshima, I don't want to use the example of Nagasaki, but that was essentially the same thing as quoted by Trump. Meanwhile, Iran's Foreign Ministry spokesperson confirmed today the country's nuclear facilities had been badly damaged in American strikes over the weekend. Let's listen into what Donald Trump had to say.
At a site like that, very, very hard to build. Very, very hard, very expensive. They spent trillions of dollars trying to do this thing, and they didn't come up with it. And we're actually getting along with them very well right now. But had we not succeeded with that hit ended the war. That hit ended the war. I don't want to use an example of Hiroshima. I don't want to use an example of Nagasaki. But that was essentially the same thing. That ended that war. This ended that with the war. If we didn't take that out, they'd be fighting right now.
And well, Trump has his sights set on the new Fed chief, saying he has 3 or 4 names in mind to replace Jerome Powell, whose term ends in 2026. Speaking from The Hague at the NATO summit, Trump again blasted Powell, calling him terrible and very stupid for keeping rates high, while names like Kevin Warsh and Scott Bessent are floating. No official picks have been confirmed.
Federal Chair Jerome Powell is sounding cautious on rate cuts, warning that tariff-driven inflation may not be short-lived as some expect. Speaking to a Senate panel, Powell said while tariff hikes could cause a one-time price spike, there's a real risk they fuel more persistent inflation. He stressed the Fed isn't rushing into cutting rates, saying it needs more clarity on the size and impact of new tariffs. Despite investor hopes for 2 rate cuts this year, he made clear the Fed's priority is price stability and not market timeless.
And well, Boston Fed President Susan Collins is preaching active patience on interest rates, urging a careful approach as policymakers weigh the fallout from tariffs and inflation. Speaking ahead of a regional visit, Collins said she still expects gradual rate cuts later this year, but warned that could change if prices shocks persist or growth stalls. Collins said the current policy stance is modestly restrictive and gives the Fed room to stay data dependent, not rushed.
And the Federal Reserve has proposed easing a key post-crisis capital rule for Wall Street's biggest banks, a move that's already sparked internal dissent. The change would lower the enhanced supplementary leverage ratio, which dictates how much high-quality capital banks must hold. The proposal would trim capital requirements by billions, a win big for banks, but critics warn it could weaken financial safeguards. Public comment is open for 60 days.
And then Nvidia has done it again, claiming its crown as the world's most valuable company. Shares of AI chip makers soared over 4%, closing at a record high and pushing its market cap to $3.77 trillion, nudging past Microsoft and Apple. Well, from powering ChatGPT to now chasing humanoids, Nvidia's next big bet is robots. CEO Jensen Huang says robotics along with AI is the chipmaker's biggest long-term growth opportunity. He spotlights autonomous vehicles as the first major use case, with Mercedes already on board. And as Huang puts it, Nvidia stopped being just a chip company a long time ago.
And Micron's results are lighting up the AI chip race. The memory maker crushed Wall Street expectations in Q3, posting adjusted earnings of $1.91 versus the expectation of $1.6 and revenue of $9.3 billion. It also raised the bar for the current quarter, forecasting a 38% revenue jump to $10.7 billion, riding the AI boom and a surge in data center demand. While the stock popped up after hours, it gave up most of its gains.
And BP shares whipsawed in previous session after the Wall Street Journal reported Shell was exploring a blockbuster acquisition of the British oil giant. The report sent BP soaring over 10% intraday before Shell swiftly denied the talks, calling it market speculation. If true, the deal would be the energy sector's biggest since Exxon bought Mobil in 1990s. But reports say a full buyout is unlikely. BP may instead be broken up and sold in parts.
With this, it's time to take a quick break, but don't go away. After the break, we'll tell you how to interpret the FNO data.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter. It's not
red territory, just down 12 points. But for our own markets, Nifty implied open is indicating a flat to positive start, 42 points up there.
All right, so that's how the Asian markets have opened up, and a muted start expected from how the GIFT Nifty is also shaping up. But coming back home, SBI will be in focus as the sources suggest 6 banks will be mandated as book runners for the QIP that will be worth 25,000 crores. My colleague Anurag Joshi is joining in with the details of that story on the phone line. Over to you, Anurag.
State Bank of India, India's biggest lender by assets, is likely to hire banks for a qualified institutional placement of equity shares. Now, the QIP is likely to take place next quarter, and most likely timing, sources are telling us, is going to be towards at the end of July or in August. Now, the banks that are likely to be hired ahead of the QIP are Citigroup, HSBC, Morgan Stanley, Kotak, ICICI Securities, and SBI Capital Markets. SBI Capital Markets is the investment banking unit of State Bank of India. The bank is planning a 25,000 crore QIP. Now, SBI's QIP is coming at a time when several other companies have done QIPs this year, taking advantage of gains in the local stock markets, especially ahead of the Iran-Israel crisis, which flew up this month. And this has also led to a lot of companies also coming in the market, promoters coming and they're selling their shares through block deals. So SBI's QIP is likely.
Thank you so much for those details, and we will keep coming to you as and when this QIP progresses. But moving on, HUL is back in focus as Unilever scoops out of its global ice cream business into a new standalone entity. The Magnum Ice Cream Company, the spin-off, will be listed in Amsterdam, London and New York by the fourth quarter of the current calendar year. As part of the shake-up, HUL is demerging its Indian ice cream business into Quality Walls. Snehi is joining in with more details.
Well, yes, good morning. So here's the reason why HUL is going to be in focus in today's trading session. At the parent level, at the group level, there's been a share purchase agreement. Before we get to that, let's just understand a little bit of background coming into the company. Remember last year in March of 2024, Unilever PLC, which is HUL's parent company, had announced that they will be demerging their ice cream business into a separately listed entity, which is now going to be called the Magnum Ice Cream Company. And this, as you mentioned, is going to be listed in Amsterdam, London and New York by Q4 of calendar year 2025. The HUL impact is that in line with its parent's global strategy, HUL also in India, in its India business, has demerged its ice cream business, which is Quality Walls India Limited. And once this demerger is effected, Unilever Group shareholders at the parent level will hold a 61.9% share in KWIL, which is Quality Walls India Limited. Now, the update here is that Unilever Group, which is HUL's parent, has entered into a share purchase agreement yesterday with the Magnum Ice Cream Company Holdco number 1 Netherlands BV, which is the holding company of the Magnum Ice Cream Company, and the Magnum Ice Cream Company BV as well, which is TMICC. Now remember that Quality Walls and HUL are not parties to this agreement. This is merely happening at a group level or at the parent level for both of these entities. The purpose of this SPA is that the Unilever Group will be selling its entire 61.9% stake in Quality Walls to the Magnum Holding Company. So what lies ahead? Magnum Ice Cream Company will eventually become a separately listed company independent of Unilever. KWIL, Quality Walls, will become a subsidiary of the Magnum Company instead of Unilever, and the control will also shift to TMICC, and KWIL is not going to be issuing any new shares in the process. So that's the update. There's been a share purchase agreement at the parent level. Not so much of an impact on HUL, but the stock will be in focus nonetheless.
All right, HUL in focus on the back of that demerger. But with that, it's a wrap on this edition of Market Cafe. Ankur and I will take care leave. Thank you so much for tuning in. Don't go anywhere because the market action will be taken forward by the market. So stay tuned.
when the stakes are high and the answers are elusive. There's one voice unafraid to